investment strategists expect the country's main stock index to keep up its momentum next year, even with U.S. President-elect Trump's threat of tariffs in 2025. For more, we're joined by Bloomberg's Stephanie Hughes. Stephanie, great to see you.
Great to see you too, Mark. And yeah, you're absolutely right. The portfolio managers I spoke with are expecting the TSX to continue trucking along and reach new all-time highs there. And part of this is because they're expecting the Bank of Canada to continue easing interest rates, probably not to the same degree as we saw over the last two rate decisions where we saw those half-point cuts, but easing nonetheless. So that eases borrowing costs and provides a tailwind for large sectors like financials, tech, utilities, you name it. You could also add precious metals to the mix. Those benefit from lower interest rates, and we've already seen that pan out over the gold names over the past year there. So they were also expecting the TSX to benefit from this corporate earnings recovery that they were expecting to happen this year, but it seems like it would be shoved off into the next year. So that will be an added tailwind there. Philip Peterson from IG Wealth Management, also a regular on this program, said that Canada actually has quite the edge over the S&P 500. He said that Canadian stock valuations are pretty reasonable right now compared to the U.S. counterparts and have more runway than the U.S., which is already quite elevated with its valuations there. So in short, a lot of the details or factors that were working in favor of the TSX this year are expected to continue working for it next year, with the added benefits of valuations increasing and from equity flows, both foreign and domestic, returning to Canadian stocks and driving the TSX to new all-time highs there, Mark.
And Stephanie, some of these strategists are arguing that a weak Canadian dollar can actually be good for certain Canadian companies' earnings. Are those exporters who do a lot of business in the U.S.?
For example, Mark, yeah, that was a really interesting argument there. So basically, obviously, the Canadian dollar has been under pressure this year, and it's been a lot worse since U.S. President-elect Donald Trump threatened tariffs that brought the Canadian dollar below the 70-cent mark. So the reason why some of these market watchers are saying this could actually be a good thing for Canadian companies is because a lot of them report their earnings in U.S. dollars and have a significant presence in the U.S. So if they report earnings in U.S. dollars and that comes back, it's translated back into loonies, that should provide more of a windfall, and it would be better for the bottom line and then translate to higher gains on the TSX, ideally there. So it was a really interesting argument, Mark.
Right. Now, we know that nothing's going to be smooth sailing next year, and it's so hard to project out a full year. But what are some of the threats that the strategists are concerned about?
Right. So the most talked about threats, and we've been talking about it for all week, basically, is the tariff threats. So that would really weigh on the Canadian economy. We're a very export-heavy, dependent economy, and the U.S. is our largest trading partner. So that would be pretty devastating. But I spoke to a portfolio manager that characterized it as mutually assured destruction between Canada and the U.S. So we might still be able to avoid that. We're also contending with a weaker economy, especially as we saw the first contraction in GDP of the year in November, and the anticipation of a slowing population growth based on the federal government's reduced immigration targets that would weigh on sectors that rely on a larger population for their customer pool, like telecom stocks. So there's a few headwinds there that could prevent the TSX from reaching its furthest potential there, Mark.
So looking at the TSX right now, 24,785, just to wrap it up here, what are some of the higher targets that you saw? I think I saw 28,000, 28,500.
Right. So there was two portfolio managers that put it at over 28,000. BMO's Brian Belsky said that Canada is still in the early stages of its recovery trend. So that should bump it over 28,000 there, Mark.
All right. Well, we'll find out in a year's time, won't we? Thanks a lot for your time, Stephanie. Good to see you.